Hello. Can you hear me? Can you hear me? Hey folks, I hope you can hear me okay. It is 4 p.m. Eastern Standard Time here on the East Coast of the United States. So I know attendance will be light today since it's a weekend, and hopefully you're not stuck inside your house with tons of snow outside. But let's see, let's see what we can get going here. All right. Yes, the whole market is down. Yes, I'm glad you can hear me. Thoughts on PL? PL, okay. PL. Oh, Planet Labs. Yeah, let's just zoom out on Planet Labs. Uh, I'm going to zoom out even further. All right, so they hit 30, what, back on the 19th, and then they had a dip, and then it's dropped since then. Let me check something else while we're doing this. Give me a minute here. PL. Let's take a look here. Let me bring this chat window up here. Oh, I don't need it there. Okay. PL. You see what I can find out on PL. All right. Well, right now, PL has it's got a really strong rating. Okay. It really got overheated when it hit 30.90. It's been down, it was down the last 3 days in a row when most stocks were only down 2 days. I would say right now that it just dipped below. If you look at this, it dipped below its 20-day moving average. All right, it's still above its 50 and 200-day moving average, which is good. Personally, I'd like to see it. If I zoom in here, I would like to see it I'd like to see it break a previous high here, 2860, before I would buy back in. All right, that's the way I look at it. Right, because it is above its moving averages, so it's still strong. Right, but a lot of stocks just got hurt. Like 80% of stocks got hurt. In the past couple of days. So I would set this, and I got out of it. I took profits. So maybe I'll set an alert for myself here to get back into it if it breaks 2862. All right. All right. Why is Google? What do they have going for them? Oh my goodness. What does Google have going for them? Google has everything going for them. They are the Standard Oil of internet technology. Literally, if you think about Google, first of all, they have the largest database of user information on the planet. All right, that's number one. They own Android, which is 70% of all mobile device operating systems. They own Chrome, which is on 70% of all the browsers throughout the world. They own YouTube. They own Google Maps. They have so much data. Their AI is probably, I know I use Grok personally, but Google's AI is, in terms of Google's AI has been killing it for years. I mean, literally, Google Analytics, really paved the way for a lot of companies. I mean, I can remember, 2026? I was in a meeting at Vanguard back in 2019 when they were making a decision whether to use AWS for analytics or Google for analytics. And clearly, I sat in the presentation because I was a consultant to them at the time. And clearly, Google Analytics blew everybody away. And Google Analytics really was the foundation for Google AI. So, Google and Google-related stocks, GOOG, GGLL, and GOOW are my biggest holdings. All right, I would say those three stocks account for probably 20% of my portfolio. Okay, right. So you chat about Google. It might as well bring the conversation. SpaceX IPO. Oh yeah. Well, first of all, there's only two companies that actually own SpaceX stock. All right. One is let me bring it. Oh, SATS, SATS. All right. It's a satellite technology company, and they have a deal with SpaceX for their technology on satellites. So Elon Musk gave them stock in SpaceX. The other company that owns SpaceX stock is Google. And let me just put it this way: if SpaceX goes public with a $1.5 trillion valuation, and that's what they expect, Google stands to get $100 billion. All right. Now that's not a lot of money in terms of Google's overall valuation. Google is a $4 trillion company, so $100 billion isn't a lot to them, but it is a substantial amount of money. So it's going to help Google stock without a doubt. Okay. So yeah, I keep reading that June-July timeframe is what is to be expected for a SpaceX IPO. Now, of course, I have SATS stock, SATS. I learned about this when I was doing some research about 6 weeks ago on how to get in on SpaceX stock, and I realized at that point, well, I was already in Google, and so I had that part covered. But I bought SATS stock also. And it's been doing okay, all right? It's not blowing up the world. I can show you SATS. I hope you all can see my screen okay. Let's just zoom out. All right. So it's done nicely. I think I bought back in right around the beginning of the year. All right. So even though it fell pretty sharply past weeks, I'm still up on SATS. Not a lot, but I'm up on it. So I'm happy about that. Okay. So I hope all of you have some kind of plans for tomorrow. No one can seem to agree on whether the market is going up or going down, but I've got I identified like 52 stocks that I would like to buy into if the market starts to go up. Now I have accounts in with three different brokers. I have an account at Robinhood, and at Robinhood I tend to keep my gold and silver and mining stocks, and I have an account at Schwab, and I keep most of my oil and tech and other stocks there. And then in my Fidelity account, I only keep stocks that I think are going to be like long-term winners. And as a matter of fact, I'll give you a list of what I would like to add to my Fidelity account if you're looking for some longs. All right. Let's drag this screen around a little bit, and I can type right into the window here, I think. Give me a second. Slightly new navigation paradigm here, so let's take a look here. All right. All right. These are the stocks that I really like, that I think would be long-term winners. All right. AROC, ConocoPhillips, all right. CRSP, I like that. Um, I was thinking about John Deere, but I made the decision this afternoon to not get into John Deere because it's been consolidating too long. This is a nice one also, is DTM is a good stock. EFXT, I like that a lot. ING, big insurance company. JNJ, Johnson and Johnson. What else do I have on my list here? Oh, Manufacturers Life, MFC. M&T Bank is doing really well. I have delayed and delayed and delayed buying this stock, but it just keeps on going up. Is New York Times. I always laugh when I think of Trump. Always refers to it as the failing New York Times. All right, this is another hot one right here that comes highly recommended by somebody I respect a lot. Is RBC. All right, Santander Bank. They just keep growing. Here's the other one, and I'm going to bring up the chart for it. UNH, United Health. United Health has been maligned. This is the United Health is the stock that dropped so much last year. It got hammered last year. Let's bring it up here. Okay. So let's just do 1 year. It's been a while. Yeah, look at this. This was like the classic example of why you shouldn't buy the dip. All right. Okay. Well, let me put it this way. You shouldn't buy a stock as it's falling because it's not really a dip until it starts to move back up. So you can see here that United Health went from like 606. They had poor earnings, and it dropped down to $427, right? In literally 1 day. So it was down $150. And then over the next, like, how many days was this? Over the next month, between like 421 and 519, literally 1 month later, it was down to $264, all right? So none of this is a dip, all right? it's not a it's not it's not a trend until you've got 2 or 3 up days in a row, right? Okay, and even then, if you take a look at these moving averages, right, it didn't break any of its moving averages until it got to 267, all right? So, you know, once it comes out of a dip, once it hits bottom, now it did break here, but then it immediately fell back down, okay? So this is like weak hands getting back in, all right? And then as soon as it started to sell off, they just dropped out fast, all right? So this would have been like the point to kind of get back in, somewhere in here between 266 and 304. Now, the reason I brought United Health up is because let's check this out here. I'm going to zoom out a little bit. All right. Here's where it happened, like right in here. All right. The white and the red, all right? Here's where it happened, all right? All 3 lines came together, okay? Red, green, and blue, and they have not, and they've done it, they did it here, right? But what I was looking for is that the 20-day and the 50-day moving average got above the 200-day, and it actually occurred right around here. So now it's dropped down below it again, but I would look for this 200-day moving average, right? As long as it stays above this 200-day moving average. When it's below the averages, it's bad. You want 20, 50, and 200-day moving averages. You want the stock price to be above all 3 of those, all right? And actually, it was temporarily. You can see right here, right? Got above it. It did it again, right? And it hasn't done that in a long time, all right? It's been below them for a while. So this could be ready for kind of a breakout. You can see here's the moving averages and the price is below, right? And it's just stayed below it for a long time, all right? So United Health may be getting close to breaking out some, okay? All right. Are you going to cash with tech? Now, I'm not sure exactly. Are you talking about like tech stocks? You know, rather cat than deer. Oh, I already have cat. All right, I've got Caterpillar already. All right, I own some Caterpillar. All right. Am I going to cash with tech? Well, I don't have that many tech stocks really. You know, if I look at the list right now, what have I got? Let me sort it by name. I do have some Apple because Apple was up. All right. I do have some AMD, not a lot. I'm just looking down the list here. MU, I have been day trading. I haven't hung on to MU, right? Even though it's getting to the point where I probably should. Avgo, I did J trade Avgo a couple of days this past week, and I made a little bit of money on Avgo. Let's just zoom out. Yeah, I was able to get in Avgo the other day, and I think I may have gotten in at the end of the day here, and then it went up overnight, and then it started to slide, and I got out quickly, you know, with some minor profits. All right. What are you doing with silver right now? Okay, I'll tell you what I did with silver. Right. I finally made the commitment to go long in silver. Right. So my Fidelity account is where I keep all of my stocks that I'm really long in. And let's bring up silver. Right. We'll bring up SLV. because that's the one I've been trading. All right, so let's just zoom out here. You can see the ugliness. All right, okay. You know, it went down a little bit on Thursday, and then it just gapped down like crazy. Friday, all right. And I was hanging on to some, and at 4 o'clock in the morning, I bailed out. I sold because I was up. I could see it dropping, and I thought, this is not good, all right. Especially since after the close on Thursday, you can see it went up a little bit, all right. And that met my criteria. When I see it started to gap up after hours, that has been working really well for me. But I saw it had gone down quite a bit, so I sold, and you know, I did really well over the past 3 weeks. I've been trading silver for like 3 weeks, right? So here's what I saw, right? Literally all the mining stocks, the gold stocks, etc., they all hit a low on Friday in the afternoon. They all hit a low at about the same time. Let's zoom out and we can see the time. Right. So what was it? 13:30, 13:51, 10 minutes before 2. All right, and I saw it move back up, and then I saw it, all right, it's really been stable. It was just, after it moved up, it didn't go above 78, it didn't go below, here's where I found support, at 73. So I went out and I bought some shares, and I bought some shares in my Fidelity account. So I'm just going to hang on to it, right? I think this is, if we look at the price of silver, let's go out 20 days, all right? I think it hadn't been this low in how many days? If I draw a line across here, it was how many trading days? Friday, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 3 weeks, okay? So literally, it hadn't been this low in like 3 weeks. And then if we zoom out on top of that, let's go out even further. Right? So you can see it hadn't been this low in, like I said, 3 weeks. Right? So I saw this as a real buying opportunity. So I just bought in because here's the deal. The fundamentals of silver and why it's attractive have not changed. There is still a shortage of silver, you know, in the world. And if you don't believe me, let's just do this. Let's drag this over here, all right? And let's talk to Grok, all right? Okay, so Grok, okay. What is the outlook for silver prices in 2026, all right? All right. Of course, I spelled it wrong. It went with me, silver, all right? Right, okay. Here we go. The outlook for silver prices is highly mixed, reflecting a tug of war between strong industrial demand, all right, and concerns over overvaluation, all right. As of February 2020, spot prices were $85 to $100 per ounce, having recently surged past 100. It got up to like what, 119, right? And that's when it dropped, even touched 120. Amid Chinese buying and dollar weakness, analysts generally expect continued volatility, which is okay, with potential for both new highs and sharp corrections. All right, but the bottom line is, here it is: bullish factors, deepening supply deficits, accelerating green tech adoption. Solar alone could consume 20 to 30% more silver. Listen, they can't bring, you know, Bloom Energy is not going to have these mini gas generators up and running fast enough to power these all these new AI data centers. And Trump has said, you know, you're we're not going to let you drive up consumer electric prices to power these data centers. So you got to figure out how to do it. So it's going to be solar panels until Bloom Energy has their mini generators going, and then of course who's the other one? The Oklo. Oklo is not going to have theirs, even though the Nuclear Regulatory Commission has fast tracked the adoption and testing of their mini nuclear devices. They are estimating 2030 to 2031 before those things are online. So that's, you know, 4 to 5 years from now. So you're going to see a lot of solar. I'm just, you know, and if you follow Elon Musk on X, you know, which I do, right? I mean, every third or fourth post from Elon Musk is about solar, right? I mean, he is pushing solar like all the time, right? And he's not commenting on everything else, right? But I was just looking at some of his tweets this morning, you know, where he's really pushing solar, right? So silver is here to stay. It's not going to go down. Small stocks you are eyeing. Okay. So what I'm doing with silver right now, it's a really long-winded answer, but I bought it and I'm holding it. All right. I don't think I have the cojones to hold AGQ right now, the 2x silver. Let's watch silver prices kind of settle down. Silver was nice. It was a nice investment when it was just doing this, you know, like little increments, like each day. You know, it would go up another 2 or 3% every day, and then everybody had to pile in because like some people that I'm on the phone with daily, they joke that, you know, like buying stocks for a lot of people, you know, since they've got the mobile phone in their hand, it's like an online casino, man. And you can see the acceleration here. Right? And I just thought it was like, I thought it was way overheated. When I saw this the other day, that scared the hell out of me. But I stayed in it, and I was really lucky. Wednesday night, all right here, I sold just about all of my AGQ, and I sold just about all of my silver. All right, I just thought this big drawdown here scared me, but then it came back. All right, after hours, I stayed in it because it came back after hours. Then we saw another drawdown here, and then it came back after hours. But then, you know, these two big drawdowns scared the hell out of me. So Wednesday night, I cashed in. All right, and I needed a new car anyway, so went out and bought myself I didn't buy a new car, but I bought a newer Ford Expedition, which I love. Right, so I took some of my silver profits, and that helped pay for it. Right, so let's go back to your questions. So that's silver. Small stocks I'm eyeing, and then I'll talk about MU. Let me pull up my list. I'll give you the small stocks that I'm eyeballing. Right. Where is my chat window here? I'll type them right in so you have them. All right. Let me sort by price. Okay, here we go. I like that. I like EFXT. That one looks really good. All right. Let me get my other list here. And these aren't recommendations. These are just stocks that I have identified that I'm going to buy. All right. DHT. I like DHT. I like Tile. Tile. Copper for sure. All right. That's a little bit more expensive. That's $33 a share. And then what else do I have that is low priced? Uh, you're gonna laugh at this, but it looks really good. Okay, BKD, Brookdale Senior Living. They run senior citizen centers, and there's an aging population like me. 10 or 15 years from now, my wife will probably say, "I'm not putting up with your crap anymore. I'm going to stick you in a home." All right, and the other one would be, and this one's getting a little bit more expensive, but SLB. All right, that's $48 a share. Normally, I stay above $15 a share. All right, I just like mid caps and large caps. I don't buy any small caps. I don't buy stocks that are $3 or $4 a share, right, or $7 or $8 a share for the most part. Right. Hey, another one that looks really interesting, right? It's not on my list, but it's on my watch list. Is HUT. HUT just every time I try to buy it, I get shaken out. But if you zoom out on HUT, you know, it's in a consolidation phase right now. It's finding support down here at like 53. Let's zoom out even further. And one of these days it's going to break, right? It got as high as like 66, and there's 56. Look at 54, all right? And for like the past 4 weeks, it's been in this area. And one of these days it's going to break out, all right? So I keep an eyeball on HUT, all right? I do like that. Which of the Google stocks that you pay dividends talked about? Oh yeah, GOOW. Yeah, thanks, Frank. The other one is GGLL. It's a Google 2X and it pays a quarterly dividend. Okay, so whatever Google does, it does double, right? And I can tell you, since I bought it, excluding the one dividend, I'm up 20% on it. And of course, GOOW. I'm up like 25% on that, excluding the dividends. All right, the dividends aren't rolled in. All right, so that looks pretty good. All right. The other thing I'll point out is that these two stocks seemed to recover pretty quickly the other day. Uranium, right? I was in it, I sold it, I took profits, but then I noticed, after it hit its bottom, it was moving back up. So I was down to like it's about what, $75 a share. I think I went down to like 2 shares of it, but then I bought back in. I bought some more shares back in. All right. Let me see. Are there any other cheap stocks that I could tell you about that I like? Oh yeah. Here's a good one, right here. I'll bring it up for you. Amtech Systems, ASYS. Right. I'll zoom out for you. Right. Look at this. This is really nice stock. All right. And and it was down a little bit. It was like 3% down, but I think it's going to pop right back up. I do like ASYS a lot. Right. That would be it for really cheap stocks. Okay. All right. SSYS. Let's take a look here. All right. Strata Systems Limited. I don't know anything about them. Let me do some quick research in another window that I've got opened up. SSYS. Okay, it's not real strong right now, right? It only has an RS rating of 55. It has been, it, uh, to be honest, it has done, this stock has done nothing, literally, for the last, since February of this year, it's done nothing. Here's the problem with it, right? It, it cannot get past $12.80 a share, all right? Every time it gets up there, it bounces. That's its resistance. So this stock is going nowhere, all right? Literally. If I zoom out like even further, like it's 3 years here, right? Yeah, you can see since February of this year, it's just stuck. This is one of the longest consolidations I've ever seen. All right. Yeah, it's stuck. All right. I wouldn't invest in this stock. All right. All right. Here's one I would invest in. What's it? Selling for $10 a share. I'll tell you one that I am invested in that I like. All right. Is Tygo. It is it's a telephone company. I think it's in South America, but look at it. All right. Since April of this year, it's just doing great. All right. It has. I think I have been in this longer than uh, not longer than Google, but it's probably one of the ones I've been in the longest. Right. It's doing great. TIGO. It just doesn't stop. It looks really good. Right. All right. Snap. All right. Let's check it out. Ugh, this is not good. Okay. I mean, it's about. I've seen uglier ones, but this is pretty bad. All right. It just keeps getting lower. All right. This is a stock you don't want to be in. All right. This is a stock I would not want to be in. Definitely not. Okay. I'll tell you one that I like. How about if I give you one that I like? Since I don't like that, one that I own, Dexcom. Right. Now you can say, look at this, man. Dexcom looks really bad, but look what it's done since November. Yes. All right. I have a screen set up to screen for stocks that have fallen 2 or 3 quarters in a row, but have started to rise in the last quarters. All right. So this one is coming back really nicely. Now, hey, listen, I'll be happy. I would be thrilled if it got up to 86 or 89 and ran into resistance and stopped. Okay, because I bought in down here at like 59. So, hey, man, if in a couple of weeks I can go from 59 to 89, that is 20 minus 1, that is 33%. And I'm happy anytime I can make 25% in 3 or 4 weeks. All right. That's typically my goal. So I like this. I like Dexcom. All right. Let's just zoom in. Do last 30 days or 20 days here. Okay. And it's not, and the nice part is it doesn't have these massive jump ups on a daily basis. It just keeps on climbing slowly. Every day there's some profits there, right? Which I like. Right? Give me a stock that gradually rises slowly, but winds up making 35 or 40% at the end of the year, and I'm happy. Okay. Why did CRS go down after good earnings? Because that's the way Wall Street reacts. All right. You get penalized for good earnings. You know, it sucks. I know it. I know it. All right. But listen, Carpenter Technology is a market leader, and look what it's doing, okay? It was one of the few stocks that was actually up on Friday. It got beat up for a couple days, but look, it came back up. It was up 2.4%. All right. So hang in there. Let's just take a look at the big picture, though. All right. You know, we look at this little stuff, we lose sight of the big picture. All right. Yeah, it's a volatile stock. It jumps up and it jumps down, but the bottom line is it keeps going up. Right? That's the bottom line. If I went 3 years, what's it look like over 3 years? Look at this, 3 years, right? And it keeps producing nice earnings, right? They may not meet expectations, but the bottom line is, here's an interesting thing. Somebody told me not to worry so much about earnings because the market nowadays seems to be more focused on sales than earnings. So on a different screen, I'm going to pop up CRS. Let's see what they're forecasting for earning or for sales. All right. CRS. Let's pull it up here. The reason I'm leaning back is I've got 4 monitors. I've got 2 up above the one I'm looking at here. And then let's see what the deal is here. All right, so sales next year, all right, 2026, sales were 2.9 billion in 2025, 3.1 billion in 2026, an 8% increase. In 2027, they're estimating 3.4 billion, 10% over 2026. So Carpenter Research is just going to keep on going up. Yeah, it's going to bounce around a little bit. You know, you're going to have some down days, but the bottom line is it's going to keep on going up. I'm long at it, and I like it. All right. Yeah, 2 days. All right. Let me just tell you what I'm probably going to do, and thank you for reminding me. All right, where's my notepad here? Is it 2 days? Is it the end of Tuesday? Why isn't that showing up here? Normally it would show me it's got earnings in 2 days. I've gotten beat up pretty badly lately. You know, hang on just for a second. I need a pen. The other day, SanDisk, SNDK, I sold my SanDisk literally right after the market closed, and they announced earnings. Oh no, I hung on to it. I rolled the dice. Listen, I got my ass handed to me on Avgo 2 months ago because, you know, everyone was saying that their earnings were going to be great, their sales were going to be great, and they were. And the freaking stock went from like $400 down to like $370. You know, now I was still up. I think I bought it like $340, but I gave up more than half of my profits, and now it's down to $345, $350. It doesn't want to come back up, which really ticked me off. So now I'm just going to, any stock that's got earnings, I'm just going to go ahead and sell it. Right? And I'm going to wait and see what happens. So if I lose out on some profits, that's okay. But at least I don't get my ass handed to me with a loss, right? Because I don't like to lose money, all right? Sorry, on the 4th is Snap, okay, Snap Logic, and earnings on the 4th, okay. Yeah, I don't have any Snap, but Carpenter Research, yeah. If you say it's on Tuesday, I'll make a note of it here. I may just sell it, you know, and just wait and see what happens. Because, you know, oh, wait a minute. CRS, they just had earnings, right? Yeah, here we go. Right. That's right. They went down and then they popped right back up. Okay, so Carpenter Research is doing great. All right. Yeah, they were down a little bit on Friday. All right. Okay, ONON. Yeah, it seems like regardless of how well a company does, Wall Street just kills them. All right. All right, so ONON. Oh, On Holdings. Yeah, they're down. And they've been down since March. Uh, so let's just zoom in. What's the last 20 days look like? Mm. Well, they're definitely in a consolidation phase here. All right, bouncing around between 46, and they're finding, you can see it clearly right here. They're finding support at 44. All right, they haven't gone below 44. Right, but there's no clear pattern here. That's the problem. All right, let's take a look on the screen. I can't share with you is my market surge screen. All right, it's copyrighted material, so that's the reason I got bumped off of TikTok, is because I shared that screen a little too often, and they can't detect it, but someone reported me for sharing it. Okay, so hey, like, it was my fault. I shouldn't have done it. All right, I take full responsibility. All right, so right now, it's got a really weak RS rating. It's only 45 out of 99, but it is consolidating. And here's the deal. I would say this. Until it breaks, like, what's the number I'm looking for here? I'm looking at a different chart. Until it breaks, like, 53, don't touch it, all right? At least it's got to get back above this high. Let's take a look at this high. 47. It would be better at 53, all right, because then it could really take off, all right? But I wouldn't touch it until it got at least to 47, all right? And then even that is risky. But if there's like 3 days of increases, you get a day like this, and you get another day where it's going up like $1.25. You get 3 of those days in a row, and it gets above 47. Then I would say it's worthwhile getting in. All right. See, here's your blue line right here. You probably can't see it. That is your 200-day moving average. So you want to get above that. All right. It's below it right now, and you really want to be above all 3 of them. Okay. Is the TikTok ban permanent? Well, they say no. They said I have to wait 7 days before I can reapply. And that was last Monday. So at the end of the day, my dad is in Brookdale. They're so expensive. Do you think their 40% surge in a month is sustainable? Well, let's take a look here. BKD. Well, according to some other charts I'm looking at here, which I can't share, is I don't know if it's sustainable, right? To be honest, right? Yeah, they are a little extended right now, but I'm taking a look at another chart. But man, they just keep climbing like every day, you know. Maybe you get in with a small position and put a stop loss on it, and even if you could walk away with 5 or 10% profit in like a week, it might be worth it. All right. How high do you think Google gets this year? All right, well, let's bring up the Google chart. All right. Okay. So let's bring up 1 year for Google. All right. Now, it did have a dip from the beginning of the year, but it started the year at 202, and now it's at 324. Right. Right. So it's up 38% for the year. I would be happy, and I expect Google to add another 20% this year. So 338, 405, I think Google getting to 405 is very reasonable. All right. If they go up 20%, I'd be very happy. Right. I don't think they can, I think they can do it. Google and Nvidia going to have the biggest growth in the next 5 years. I agree with that. Okay. I agree. I don't think Apple will. I don't think Microsoft will. Meta seems to be doing all the right stuff lately, so I think that's a good sign. I think of those, I'm still bullish on Tesla. I still have my Tesla stock. All right, I'm going to hang on to it. Never underestimate Elon Musk. That's my opinion. All right. Okay. All right. Somebody asked about SoFi. Let's bring up SoFi. Here's just an appointment for me. Yeah. Since the beginning of this, since November the 10th, man, look, all it does is fall. And it's a, what are their, let me pull up their earnings. Let's see what they look like for this year. Let me see if there's any fundamental reasoning for this. First of all, what's their RS rating? Their RS is down to 77. What do their earnings look like? Their earnings were down a little bit. All right. But here's the deal. This is the annoying part. Earnings for 2026. They're going to go from 39 cents a share up to 58 cents a share in 2026. And their revenues, sales in billions, 3.6 billion in 2025. They're estimating 4.6 billion, a 28% increase in 2026, and 5.6 billion, another 21% increase in 2027. And earnings per share up to 80 cents in 2027. So it just doesn't make sense. This is one of these weird stocks where there's a divergence, and I don't know what they're doing wrong. It's kind of like Vertiv, VRT, right? VRT is a stock that should be going up, and it's not. Right? Oh, it is. That's going up. What's the other one I was thinking about? Forget. Hey, here's one that you should definitely keep an eye on. I went into it last week, and it's climbing really nicely here. Right? It was down a little bit on Friday, but VIAVI Solutions, right? And in terms of what I see in market search charts, it has a lot. It's got some headroom to grow. It could be looking at, it's $24.99 now. It could definitely be looking at 28 to 30. Not a huge jump, but still 10-15%. Okay. The sound is bad at the moment. The audio is messed up. I don't know. Is my audio messed up for anyone else? Because I can always try putting on my headset. Right. Frankie, can you hear me? Tommy, can you hear me? Let's see. just some noise there. All right. I'm still here. Yeah, audio is bad. It's bugging a lot. Huh? Well, let's see what I can do about it here. Disable performance mode. All right. I don't know. Is that any better? We can hear you. It's buzzing. Is that any better, folks? Hello, hello. Can you hear me? I can try switching to my headset. It just started buzzing out of nowhere, huh? No better. Like an echo buzz, huh? Weird. Maybe a reset. Okay. Let me try something. Okay. Right. Give me a second here. I'm going to try using my headset. This will take a minute, okay? All right. Is that any better? How about that? Does that sound better? Okay, you can hear me now? I'm not sure if the headset is actually working, but all the little static seems good. All right, hang on. Is it the microphone? Yeah, microphone. All right, sound is better. All right. So based on, say, SoFi. Oh, let's go back to the chart for SoFi, okay? Yeah, I could see there was a bunch of static jumping in on the microphone here. So let's go back to the chart for SoFi. All right. I would not touch SoFi. All right. Um, it it needs to get above its 20 and 50-day moving averages. Okay. So I would say SoFi, let SoFi get above like 27. Okay. SoFi needs to get above 27. All right. Yeah, before I would buy it, needs to get above 27. All right. Yeah, for sure. Woo is not a ticker. Are you sure? No, you're right. It's not a ticker. Um, hey, let me share a good stock with you. Okay, RTX. Uh, this comes very highly recommended. All right. Somebody recommended it to me, and I told him, "Hey, I already own it." All right. RTX looks really good. All right. Yeah, I like RTX quite a bit. It was actually up nice on Friday. All right. What was it up? $1.05 a share. All right. All right. We'll do Path and then we'll talk about USAR because I was just looking at USAR. All right. All right. Path. PATH. Let's check it out here. Oh, that's UiPath. I would say not right now. Just look at it. It's below its 200-day moving average. It's below. Red is 20. White is 50. It's below all three moving averages. Path needs to get back up to $15.75, $16 a share. Okay? Before we get into it. All right. Then let's take a look at USAR. All right. I dumped my USAR when it dropped, on Friday. And I also had UUUU. Um, it gapped up really nice. This was, last week when Trump said they were going to buy some USAR. The U.S. government was going to invest in USAR, right? And then the bottom dropped out of it. So I almost bought back into USAR, but my preference is I like UUUU a little bit better. All right. Now let me compare the two, and I'll give you some specs on both of them. Don't talk about Kevin Marsh. All right. Give me a second here. I just want to pull up both. Let's see which one did better. All right. UUUU. All right. And USAR. Okay. USAR. I want to compare the two side by side. All right. So well, I'll tell you, UUUU for the year did much better as compared to USAR, but I don't think USAR was around that long, right? Yeah, it only came into existence, in June? Really didn't start trading till December. So let's just say over a month. USAR did better over the past month. It was 84% up over the last month, and UUUU was 57%. So I take that back. USAR is better than UUUU. All right, they're both in the same market space. Okay. All right. Are we going holding DTI? Oh, thoughts on Kevin Warsh? Well, some people call Kevin Warsh a an interest rate hawk, but apparently it's a lot more nuanced than that. And listen, they say he was in favor of raising interest rates and stuff. Believe me, he wouldn't have gotten a nod from Trump unless Trump had some confidence in him that he would ease interest rates. Now, I'm going to bring up a clip that I reference a lot. Every time somebody bashes Kevin Warsh, let me see if I can find it here. Give me a second. I knew I had it saved on my screen here. And maybe, oh, here it is. Here it is. Kevin Warsh, right? The Fed seems to see every sign of economic growth as inflationary. That's not how it should be. Economic growth isn't inflation. Growth is how you solve these problems, not cause them. They think inflation comes if the economy runs too hot and workers get paid too much. That's not my view. That was Kevin Warsh on CNBC. All right. So right now, I like the guy. All right. Until I'm proven wrong, I like the guy. All right. So, all right. Am I ever going to do options? I would really like to, but I'm not good. I'm not good at speculating where the price of a stock will be in the future. I think the only thing that I would do an option on is probably Google, and then probably a million people would be betting right along with me on Google. let's take a look. All right, give me a second here. Google. All right, and trade Google. All right, hang on just for a second. What's the deal here? 255,000 calls versus 136,000 puts, right? So there's a lot more people betting that Google's going to go up than it's going to go down. Okay, that's what I see. All right. Yeah, that's probably the only stock that I would bet on. All right, okay. RHHBY. Yeah, let's check it out here. RHHBY. Roche. All right. Yeah, this came up on one of my scans a couple of weeks ago. All right. This looks pretty good. Let's take a look at what my market surge says about Roche. All right. RHHBY. Roche. Man, like, where's my camera here? Yeah, all systems go on Roche. Looks good. It might be getting a little extended, but probably doesn't really look like it's really strong. Okay, but Roche looks good. All right, it's coming out of like a long dip. All right, so yeah, I like it. It looks good. All right, all right. Are we still holding DTI? Let me just double check here. No, the answer is no. All right, I got out of DTI when it started to drop last week. All right, because I my, my bad is I got into it too late. Right. So I learned about it too late. I think I I think I got into it like right around, like 122, and then it just started dropping down, and I got out of it. So let me see what's the long range forecast for DTI. Well, that's a week. So it did have like three, one, two, three, four, three nice weeks in a row that were up. And then it's kind of fallen on hard times. Yeah, see, it hit, it hit not an all-time high, but the highest it's been since 439, the highest it's been since literally September of last year. Yeah, and then it faded. So, and its relative strength rating, it's going down. It's still well above its 20, 50, and 200-day moving averages, but it's fading right now. So, yeah, I got out of DTI. I saw my profits getting eroded on a daily basis, and I just thought, no, good. Any other long-term stocks besides Google? Yeah, yeah. Let me give you what I'm in long term. Okay. Um, and there's some ETFs in here that I really like. Okay. Uh, Let me pull up the list here. First of all, I'll give you my ETFs that I really like. All right, that I'm in. All right. Uh, I'm in, and I'll type them in the chat window. I'm in EPU. Might be a good time to buy. It went down. It went down on Friday. I really like FRDM. FRDM is good. All right. AVNV, which I really like. It's done well for me. EWO, right? That's Austrian. And those are the four that I really like. This one's been down a few days, but it was doing really well. Okay, ZSB, I like that. All right, and then let me go to my list of stocks that I'm long in. All right, give me just a second and pull the list up here. I do own ASML. It's expensive as hell, but it's doing great. Northrop Grumman, NOC, all right. Curtiss Wright Corporation, CW, LMT, Lockheed Martin. Of course, I'm in Tesla. I'm in Seagate Technologies, STX, long. I'm in BAP, all right, long. LHX, L3, level 3, Harris Corporation. Definitely TSM, long, Taiwan Semiconductor, all right. CRS Carpenter. Going down the list here. All right. I'm reluctantly in Amazon. Don't ask me why. But it seems to be doing okay. All right. This I'm in long too. GLTR, glitter. It's a gold ETF. I think gold's going to continue to go up. Right. But I keep an eye on it. Right. AME. I'm in Amatec, long. All right. No, not that. I'm in APH. I'm in Amphenol, long. Oh, this one I really like. MLI, Mueller Industries. All right. I like that, long. Oh yeah, KRMN, Carmen. I like that a lot. Of course, GLW, which is Corning. GLW, all right. And then, oh yeah. No, I'm not going to do that. I'm not going to share that one. No. I gave you FRDM. Oh yeah. Let's type it in here. ICOP, copper. Copper definitely continues to go up very nicely. And TEVA, TEVA. I like TEVA a lot. Right? It's been super consistent. Oh, I'm going to put Halliburton out there also. Hey man, we're going to get business in Venezuela, and if we can get Cuba to fold, there's going to be a lot of business in Cuba for Halliburton. Halliburton, if you don't know it, after the Gulf War, Halliburton made fortune rebuilding hospitals and roads. Like they are the most favored company of the United States to go in and rebuild They specialize in country rebuilding. As a matter of fact, Dick Cheney, who was George Bush's vice president, no, that was Dan Quayle. George, I forget what role he played, but he was president or CEO of Halliburton for many years. All right. Let me think. No. Let's see here. I'm going to call it that. I think that's it for the ones that I like for long. Okay? All right. All right. What's the one trading mistake that was hardest for you to stop? Oh, that's really easy. Okay? Okay. I'll give you a perfect example. I'm typing, but I'm going to show you. Buying in too early after a drop. Okay. So, let's just take a look at what did I buy into the other day that I should have waited on? Here we go. Let's pull it up. All right. Aris Mining, right? I still have to stop myself, right? So I was watching, and it hit a low here during the day, and it started to move up, and it kept moving up, and it moved up. It was like 13:45 over 15 minutes, and I thought, all right, we've got a recovery underway, and I think I bought here. All right, I only bought 15 shares, like $250 worth. And what did I buy in at? ARMN. I bought in at 17.54. And now it's at 17.45, right? So it went down. I should have waited. I should have just waited till Monday, see what happens on Monday. But I thought, hey, what if it jumps back up? I'm only putting a little bit of money in, but I bought $261 and I'm down $45 since I bought it. All right. So that's what I really have to stop myself from doing. That is my biggest weakness, buying in too early. I try to time the market. You can't time the market. I should wait. All right. That's on my list of things to do for 2026. All right. Buying in too early after a drop. That's me. All right. All right. Did you sell your holdings in HYMC? Not all of it. All right. I retained some HYMC. All right. and I didn't buy in too early on that. I still have a couple shares, it's still showing a little profit, but I'm just waiting for HYMC to bounce back. I thought it was going to bounce back. It's yeah. See, it hit this number here, started to move up. I restrained myself. I thought, look at this one. I'm thinking, whoa, look at it hit its 200-day moving average. It's above all three. Should I buy in? And I actually waited on this one. I just bought ARMN. All right. And let's pull up ARMN, which is the one I grabbed the other day. ARMN. All right. Yeah, actually, I made a mistake here. I should have waited. So at least it got to its 200-day moving average. It was above its 20 and 50, but it didn't hit that. Came close, but now it's still not there. All right, we'll see what happens. I'm really anxious to see what happens at 8 o'clock tonight when the 24-hour markets reopen. You know, because a lot of these stocks they're either gonna go up or continue to go down. So I may be busy, you know, at 4 o'clock tomorrow morning, selling more of my positions if SPY drops a lot more. You know, let's just take a look at SPY. I'm not enthusiastic. Let's put it that way, because SPY went down after hours. Right? So this is where we closed. This was looking really good in the afternoon. I'm thinking, all right, great. You know, I think I bought some IREN, and I traded some IREN. I traded some other stocks, Credo, and I forget what else I traded, you know, and made some money in the afternoon. And then, boom, it went down. And then, boom, it went back up. And then after hours, now it's down to 690. All right. So, you know, I'm just not enthusiastic at this point, you know, but it's the way it is, right? Do you like to buy at a certain time of day? Yeah, let's do CoreWeave. Now I'll answer that. Yeah, you definitely want to stay away from CoreWeave right now. CoreWeave is looking pretty good here, and then, you know, it had Wednesday, Thursday, Friday down, right? And it's trading below, you know, its moving averages right now. I would say, you know, if the market goes up, CoreWeave's going to jump right back up, because it was on this really nice upward path here, right? I mean, it looked really good, especially coming from 73 just like 2 weeks ago or 3 weeks ago, up to 114. So, you know, tomorrow if CoreWeave can get back to 100 from 93, we'll see what happens, you know. It's a 24-hour stock, so people can start buying it at 8 o'clock tonight, all right? Which is what, two and a half hours from now. We'll see what, I'm really anxious to see what the market does, all right? So, all right. Okay, I've been a while for, do I like to buy at a certain time of day? Yeah, there's 2 times that I like to buy, okay? I like to buy at the end of the day, right after the market closes. And if I see a stock like starting to move up, I'll buy in, all right? Especially some stocks that have moved down during the day, right? You know, let's go back here. Let's do like 5 days. So, you know, look at CoreWeave this day, all right? It moved up really nicely. It moved up from like 105 to 107 after hours. You know, I'll buy in then. And then the other times that I buy is typically I will wait 15 minutes after the opening bell. All right. If I want to get into a stock, right? Because a lot of stocks, as soon as they open up, they will shoot up, and then they'll shoot back down. Look at this one. This one was down. Here's CoreWeave, right after the opening bell. Right, even in the first 15 minutes, it went from 105 down to 101, $4 share. And then boom, it was up here, right? And that's at 948. So it's still very volatile here. I typically wait until after like 10 o'clock. 10 o'clock gives me an idea of which way the stock is going to move, right? So let's use this as an example. Here's CoreWeave, right? You can see what it did. Now let's change that to Micron. See, literally, it was down, then it was up. Now this is a bad day. This is a bad example. Let's move back to one of the days where it was normal, okay? All right, let's go back here. All right, here we go, all right? So there's first 15 minutes, then another 15 minutes, and then at 10 o'clock, it started to drop a little bit. I don't think we can do this, so. 5 days, 5 minutes. Let's zoom out. Yeah, let's pick a day where it went up, okay? This day went up, right? Let's just take a look. So it started out down. I wouldn't have bought it like I'd never buy right at the opening bell, okay? Because, boom, I got hit. And then this day, I know I traded it this day, and then I could see that it was moving up, all right? And then you can see here, this is 9:45, this is 9:45 to 10, and then at 10 o'clock, it's up. Boom, I'm in at that point. And it's up, up, and up, and I don't think it gave it up the whole day, all right? We opened at 4:05, and where did we wind up that day? 4:10. That was a good day, all right? So I typically wait till right around 10 o'clock for the dust to settle. It just, the market convulses the first 10 or 15 minutes, all right? What do I think of ARKX? Oh, man. Hey, I'm going to show you something. I'm going to show you something I posted earlier today. All right, I'll just share, All right, here. All right, here's my Twitter feed profile. Replies. All right, here. Yeah. SLV. Oh, yeah. Here we go. Here's the current top 20 holdings in Cathie Wood's ARK. All right. I kind of looked at this and I think I had a reply. Yeah. I said, DE needs to break 535, then I'll buy it. All right. So, Cathie Woods, I don't know. She makes some really weird decisions, that's for sure. Okay. So did you say ARKK or ARKX? Yeah, ARKX. Yeah, let's take a look at ARKX. I mean, they're not bad stocks, but she makes some weird decisions. All right. She's like 2 hours north of me, up in Sarasota, Florida. Yeah, man, that's kind of disappointing. All right, this is not disappointing right here. Nothing you can do about that. Okay. But we got up here and then we just started dropping. All right. So I don't know. Let's just do a comparison here. Let's compare it to one of the ETFs that I like. All right. Study. had a study, compare it with FRDM. This is one of my favorite ETFs. All right, where is FRDM? Oh yeah, there's FRDM. See, as Kathy's stock was moving down, my FRDM was moving up, 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 up. She started dropping, and here you go. I kept moving up again, up again, up again, and then of course the market got hit. Right. So I tried ARKX for a while. I didn't like it. I got out of it. I just think, if we go back over a year, this is mine, okay? So this one, I'm beating ARKX now, but I'm not quite as volatile as ARKX, all right? See, she jumped up, I jumped up a little bit, she dropped down, I stayed neutral, she dropped down again, I stayed neutral, she moved up, I moved up, she moved up, I moved up, she went down a lot, I went down a little bit, we moved up together, I moved down less, I moved up more, I moved up more, I moved up more, okay? So I really like this ETF, FRDM, all right, it's nice, okay? Why do you like ETFs so much? Because ETFs spread the risk out over multiple stocks. They're like mutual funds, with the exception that mutual funds are more, on average, are more actively managed than ETFs are. And I've got multiple mutual funds, all right? I'll show you some of my mutual funds, all right? I'll just pull them up here. You can judge for yourself here. Let's see, funds that I own, right? ALZFX, ALZFX. All right. Let me do this. Let me turn off all of the. Delete study set. That didn't work. Let's try it again. Study set. Yeah, okay. Why am I still having these lines on here? That's weird. Okay. All right. Well, ALZFX. I can tell you about ALZFX. It's a mutual fund. Okay. Last year it was up 37.5%. Right, which is nice. Okay. Another one I have is AVALX, okay? AVALX, all right? That's another one, okay? And it's done really well. Last year, it was up 83%, all right? And then last month, it's been up 13%, all right? This is a good one also. It's, if you can get mutual funds. Fidelity, FSELX. This is a really good mutual fund. All right. FSELX was up 70% last year, up 14.9% in the last month. Over the past 3 years, it's been up 248%, like 75%, over like 80% every year for the last 3 years. That's kicking butt. It's doing really well. All right. Here's another one. PAGRX. PAGRX. All right. It's doing great. All right. PAGRX up 5% this month. For the year, it was up 41%. Okay. So I mean, there's some good mutual funds out there. Very nice. All right. This one's nice too. Vanguard, VGPMX. All right. Let's just pull it up here. VGPMX. Let's try that again here. VGPMX. All right. VGPMX was up 82% last year. Okay. In the past month, it's up 13%. Last 3 months, up 25%. It's, you know, it's really good. All right. There's some really good mutual funds out there. And of course, like ETFs, they invested multiple stocks, right? Just stay away from ETFs that say they are like 2x ETFs, all right? Stay away from those because they're double like a particular stock. All right? You got to be careful which ETFs you buy into. That's why I gave you the list of ones like FRDM that I like, etc. All right? They're good. They're good ETFs. They're not tied to one particular stock. All right. Okay. FX is the mutual fund. You said no. It's FSELX. Let me type it in the chat window. FSELX. All right. I'll give you another one too, which is nice. No, let's stay away from that. There's a gold ETF or gold mutual fund, but stay away from that. Okay. Right. Yeah, FSELX is very good. All right. Okay, that's going to wrap it up for today. Tomorrow is Monday. I will see if I can get back on TikTok so we can simultaneously broadcast there. I have an option to also do this live session on X. So when I get it set up tomorrow, I'm gonna broadcast live on X also. All right. What do you think will be really big this year? I don't know. I'm going to have to look at, see where money's rotating. I think that precious metals will continue to be strong this year, and mining stocks will continue to be strong, just because precious metals are in high demand and are getting scarcer. All right, that's my opinion. So I'm hoping to be in like multiple mining stocks, and have copper, silver, gold, platinum, and palladium. All right, as those ETFs. I'm really hoping that I think they'll do well this year. All right. I don't know if gold will do as well as it did last year, but I think it will continue to rise. All right. That's just my personal opinion.